I'm going to show you guys how every person in the real estate industry really needs to know how to purchase a home with your life insurance policy. There are several different ways individuals can actually purchase home. One, utilize a traditional mortgage. This is the most common way to buy a home. The buyer puts a down payment and borrows the rest of the purchase price from a lender, then pays back the loan over time with interest. Two, they can actually do a cash purchase. The buyer pays the full price in cash without the need for a mortgage or other financing. Three, they can actually rent to own. This allows the buyer to rent the property for a specified period with the option to purchase the property at the end of the rental period. Four, owner financing. This is a scenario that the seller acts as the lender and finances the purchase of the home for the buyer. Five, FHA loan. A Federal Housing Administration loan is a government-backed mortgage that is insured by the FHA. It allows for lower down payments and credit scores than traditional mortgages. Six, VA loans, which is my favorite, by the way. A VA loan is a mortgage loan guaranteed by the U.S. Department of Veteran Affairs. It is available to eligible veterans, active duty service members, and surviving spouses. Now we discover the ways that people usually purchase homes. Let me show you how you can actually leverage your life insurance policy to actually purchase a home. There are two ways. One, collateral assignment. A collateral assignment is when a policyholder assigns their death benefit to a creditor or a lender as collateral to a loan to purchase their property. This means that if the policyholder passes away before the loan is paid, they'll actually collect the rest of the money from the actual death benefit. Or two, here's a better alternative. We call this real estate grade life insurance. So guys, I have a client who actually utilized real estate grade life insurance, and here's what he does. So my client wanted to utilize this policy to purchase new properties. So here's what I showed him. So my client wanted to actually utilize $500,000 over a 5-year period. So I broke it down in a 1-year increment. So my client utilized $100,000 per year in this policy and never made another payment ever again. Here's what he did. Guys, notice my client has a face amount of $1,772,009 for a death benefit. Based on the way this policy is structured, my client would never ever lapse this policy. This client would never have a lapse policy based on the structure. Also, there's no MEC year. MEC stands for Modified Endowment Contract Year. That's basically the year of taxation. They'll never be taxed in this policy whatsoever. Of course, this is based on $100,000 per year for 5 years, as my real estate investor friend wanted to actually put away. So notice, after utilizing the real estate grade life insurance technique, notice my client now has access to 100% of the capital day one. So guys, after applying the real estate grade life insurance technique, notice my client put $100,000 in here year one. Of course, the cost of insurance must be deducted. Now my client has access to the full $89,714 day one. Now, my client can actually take that out, utilize it to purchase a property, as well as it's going to continue to grow as if the money is still there. That's called infinite banking, guys. Now you realize why every realtor and why every real estate investor needs to learn how to purchase a home with their life insurance policy. So if you actually found value in this video and you want to learn how to utilize real estate grade life insurance, go ahead and DM or comment RGL, and I look forward to speaking with you for a free no-look consultation so you can learn how to utilize life insurance policy to purchase a home. American Dream CEO out.